But the whole notion of running a cloud accounting firm and fixed fee pricing was just like viewed as crazy, disrespectful. I got threatening, but like basically people emailing me going, "You're cheapening the profession," and that sort of thing. So that was always an interesting thing to challenge and counter. But at the same time, it was kind of great, right? If you fixed fee or fixed price something, you got cloud tech, you focus more on what does the client need and how do I make my firm better. And I think that was our whole driving force behind the why.
Hi everyone, welcome to episode 132 of the Startup Playbook podcast. I'm your host Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and their advice to current and future entrepreneurs. I'm delighted to have the founder and CEO of Practice Ignition, Guy Pearson, as my guest for this episode. Guy has helped to transform the accounting industry, initially with Interactive Accounting, which launched in 2009 as one of Australia's first cloud-based accounting firms. Between the ages of 25 and 28, he launched 5 businesses, with the last one being Practice Ignition. Practice Ignition has gone on to be one of the leading companies in its space, having grown to over 120 staff around the world and having raised $35 million in funding, including a $26 million Series B round led by Tiger Global Management. Alongside his role at Practice Ignition, Guy is also an active angel investor, having invested in over 20 companies since 2013. In this interview, we covered a wide range of topics, including building for customers of the future, the key traits of successful storytelling for founders, how Interactive Accounting and Practice Ignition grew through an ecosystem partnership with Xero, why it was important for Practice Ignition to be global from day one by expanding to 4 offices in 4 countries despite only having 7 staff, Guy's fundraising journey to raising $35 million in funding, and what he looks for as an angel investor, and much more. Without further ado, here is my interview with Guy Pearson. Guy, welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show this morning.
Thanks for having me, Rohit. Great to be here. Hello to everyone out there, and looking forward to it.
So, Guy, for those people that may not be as familiar with you or your background, do you want to share a little bit about your story and what got you here today?
Sure. So I'm a reformed accountant or a recovering accountant by background. So history working for what they call mid-tier firms here in Sydney. Where I'm based after studying university at night, working during the days. Had a stint at Four Pines as one of their first bartenders before heading off overseas for 9 months and spending all my life savings, which is very unaccounting-like, and did that after seeing sort of Xero, Google Suite, Skype come to life with a view to building the first sort of, accounting firm for startups or cloud-based. And kicked that off in the end of 2009. We opened our doors in 2010. And from then on, basically started growing that business around initially moving bricks and mortar stores into the cloud. So point of sale systems, all those sorts of things, retail, hospitality, including companies like Four Pines. And then as we moved into bookkeeping, management, accounting, and tax for growing businesses, we got pulled more and more towards the tech savvy folks. Being startups, and in my downtime on the weekends, I would be chatting with friends, like my good mate Nick Muldoon, figuring out what other tools and problems we could solve. And I really had this urge to try and solve something in accounting, business problems, for SMBs that would be more widespread than just running a small accounting firm here in Oz. So I tried things on the weekends. I was fortunate enough to be joined at Interactive by 2 good friends who I'd known, Gareth Bryant, who's the current CEO, and Lisa Callaghan, who's no longer with the company, but off doing her own amazing things, including sailing, which she loves. And out of all those sorts of trial and error experiments on the side, the company number 5 of Interactive is number 1 was Practice Ignition. And what I saw there as a way to solve how services companies deal with their clients. Not to quote the big boys, but in that same way that you have 2 parties transacting at a bad experience previously. Most people don't love their accountant, and I wanted to help try and change that layout, but also help accountants run a better business. As all the technology comes in, there's price squeezes, efficiencies to be made, and they tend to struggle to focus on changes and implementing and running their own business. So I tried to build it ourselves at Interactive Accounting by sticky taping, concatenating the using what was before Zapier tools to try and connect things, to have sort of a fixed fee agreement that would run with contract linking to workflow invoicing and collections and central source of truth. Unable to do so, begged everyone else to build it. It wasn't their journey. So our the tools that we were using, they're often their own distinct journey, and used the line of credit I had to actually look at acquiring another parcel of fees to bolster the accounting firm to kick off the MVP, and had another angel investor kind of match me dollar for dollar on what I put in. And from then on in, it was sort of, raise every 12 months, hire people, double or triple core key metrics, figure out what was working, and slowly grew what became Practice Ignition, which today is north of 120 people around the world. We've got offices in 5 countries, and I'm still very lucky and happy to sit on the board of the accounting firm that kind of started it all for me, which is Interactive Accounting, which has an office in Sydney and Melbourne. And yeah, I get to invest in companies. So being an accountant, we all have self-managed super funds, and I was lucky to buy shares in Xero at a right time and sell at a right time, as well as having savings over the years, and then turn that into my own sort of mini VC portfolio and invest alongside great people like Matt Allen, who you've had on the show before, a few other folks that you interviewed, I think Rohit, and we all try and solve that problem of SMBs getting better information faster, or changing the world for the better. And that's kind of me in a nutshell. And when I'm not doing that, I love a good beer, having worked at Four Pines, getting in the water, playing basketball, watching basketball, and hanging out with friends.
Love it. And also shout out to Matt as well for giving an intro to help make this interview possible as well. There's obviously so much that I want to sort of dive into for this episode as well. A lot of what you've sort of touched on as well. But going back, you mentioned Gareth. He's one of the people that I actually spoke to as research for this interview. And he mentioned that he's known you through like second year of university. We both kind of bonded over a terrible tutor, is the story that he told me. But
yeah, that's right.
But one of the things that he sort of mentioned, and you touched on this, where I think you had 5 different businesses between the ages of sort of 25 to 28 that you'd launched. And one of the things that he mentioned was that even back in university, you were kind of like the networker, the connector of people, and you also had this sort of entrepreneurial spirit. I'm just wondering, is that something that was kind of innate in you, or something that you sort of cultivated over time? And did you always kind of know that the plan was to kind of go off and do your own thing?
To be frank, I thought I was going to be, when Gareth and I met, so second year uni, yes, the story is true. We had let's call it a management accounting tutor that we both disagree with, and just fundamentally so, like, just there wasn't really the opportunity for debate on certain questions. And so Gareth and I had been quite stubborn, and I guess opinionated, got to know each other that way. And if you've met Gareth, he's one of the nicest souls you'll ever meet, but he doesn't like it when things, like, there isn't the option for opinion or debate on certain things. I would actually argue that at that time I was probably predestined towards becoming a suburban accountant. I really love numbers and people and helping people. I definitely was a connector, and I don't mean that in the business sense. I just really liked introducing good people to good people, and love trying to make good things happen, which helped later on, but ultimately at the time that wasn't quite correct. And I guess I'm either an extroverted introvert or an introverted extrovert. I'm not sure which way it sways, but very much enjoy my own company, as well as very much the company of others. So yeah, I mean, all of that was probably unleashed in my second job I had. I worked for a great guy called Peter Barrow, alongside another guy called Sid Soyne. Shout out to Sid. He runs one of the guys behind Bricks Distillery here in Sydney. Also runs his own accounting firm these days, but we work together. And Pete kind of brought out let's call it the more entrepreneurial side. And we had amazing clients early on in my career who were like the founders of Flight Centre, Rod and Gun, founders of Boost Juice, and we looked after their private enterprise. And so it's kind of funny when you deem success as, particularly in accounting land, maybe a BMW, a nice house, kids going to private school, that sort of thing. Then you have someone walk in shorts, t-shirt and flip-flops, who has achieved way more than that and is more interested in what next and how to better achieve outcomes and goals, and a good person. Couldn't care less about the material things. And that kind of switched my gears alongside Pete's encouragement to try throwing things against the wall and see what sticks. And so I think from then on, it was probably a predetermined path. I'm not sure, to your point, whether you're born that way and it's innate, or but my parents both enjoyed good conversation and talking and interacting with people. So I would say that part was there, but the entrepreneurial drive kind of came a bit later.
Yeah, because I think even with Interactive, from what I understand, it was one of the first accounting firms in Australia to focus on the cloud-based model as well. Which seems in hindsight to be an obvious decision, but I assume at that time it was very sort of different and unique in a market that is used to operating in a particular way. I guess where did that sort of vision for that come from? And I guess what was that like in trying to put a different model into an industry that was so used to operating in a particular way?
Yeah, I mean, I guess it was unique for at the time. Like I flashed back, and everyone, including my family, thought I was crazy. They thought backing something like Xero was incredibly risky, whereas now you would assume it's the default, much like perhaps MYOB was at the time here in Oz. Funny story, I had to convince Gareth to come work for us. Like that's how risky it was perceived to be, like over 6 months or so. I had to teach my other early business partner, Lisa, like she was heavily bent on PCs, didn't like cloud tech, wanted Excel. So it was a bit of a challenge there. Was very thankful to have people who probably a lot more advanced in that journey alongside. So like I mentioned, my good friend, Nick Muldoon, he introduced me to Xero originally, but it wasn't like, here's how it works. It was like, you should check these guys out. Skype and Google Suite were kind of normal for me at that age. I think it was 23, 24. But the whole notion of running a cloud accounting firm and fixed fee pricing was just like viewed as crazy, disrespectful. I got threatening, but like basically people emailing me going, you're cheapening the profession and that sort of thing. So that was always an interesting thing to challenge and counter. But at the same time, it was kind of great, right? If you fixed fee or fixed price something, you've got cloud tech, you focus more on what does the client need and how do I make my firm better? And I think that was our whole driving force behind the why.
Yeah, and what was that? You mentioned that even trying to convince someone like Gareth to join was a little bit challenging. I think he mentioned that it took him about sort of 12 months or so to finally sort of come across as well, because I assume that the challenges weren't just kind of in the market, but also trying to convince great people to come and join you on this as well. What, I guess, gave you conviction that was where things were heading, or like what was it that you saw that I guess other people weren't really sort of seeing at that time?
I think like a lot of accounting deliverables are recurring, right? So like if it's BAS, monthly profit and loss, annual meetings, like it's all stuff that you do every year. And then the advent of cloud software being wholesaled via the accounting firms, which have been done partially with MYOB and Oz, but with Xero, it was kind of day one, that was their go-to-market model. And then you had others like in the early days, like Fathom, who's up in Brisbane, and Receipt Bank out of the UK, same model. And so all of a sudden, if you wanted to run this cloud-based firm and get more information in real time to help you, and time and cost and billing once a year or once a quarter wasn't going to cut it. Now, it might be fine for the first 10 clients on the cloud. You can wear that. But if you're thinking about 100 or 500, depending on the size of your firm, your cash flow model just starts to break down. And then I thought about, well, what does the entrepreneur of the future want? Because I know myself, I didn't like the notion of unknown bills. Getting a bill from a lawyer, or like obviously I'd never saw another accountant, but getting a bill from a lawyer as an example out of the blue that I wasn't expecting for an amount that I hadn't anticipated was heartbreaking, particularly when you're young and you've got no cash. So, I likened it to that. And what would I want being an entrepreneur? And everything else in the world, gym memberships, telephony, mobile had moved from, time and cost through to, fixed rates. And therefore, if you have assurance, you can push forward and more certainty around your decision. But once again, it then pushes pressure on the company providing that fixed cost model to improve their level of service and perhaps increase their prices. But like the pressure is all on them. Accountants for too long, in my opinion, and I mean, no disrespect to people who still charge on hourly rates, sometimes it's applicable, but to do the normal things, were paid to figure out problems. So they didn't have a solution, so they would charge the client to figure it out. every time, and they wouldn't build like templates and formats as much as perhaps they should. And so they just, charge it on to every single client. And I wanted to sort of flip that model and once again cater to that entrepreneur of the future who I wanted to be, the chosen accountant for.
Yeah, and more aligning of interests between, I guess, what you're trying to achieve and what your customers are trying to achieve as well.
100%.
One of the things that you mentioned earlier was, I think you mentioned Nick Muldoon was really good at, encouraging you to throw things against the wall and see what stuck. And you kind of touched on this a little bit earlier in terms of, launching a couple of different businesses within a sort of short time period, which sort of ended up resulting in Practice Ignition launching. What were some of what sort of instigated that in terms of you already having a business in place? Was it something in particular that you were sort of looking for? And what did that sort of process of experimentation look like as well? Did you know specifically that you were going to run 5 different experiments, or was it just an ongoing process until you sort of found something that worked?
Definitely an ongoing process. I knew I didn't know enough about technology. Like I knew how to use it. I'd been a bit of a nerd growing up, so like the notion of systems and process flows weren't foreign to me. But in terms of how to create something from scratch, I had no idea. And so there's Interactive, which I went off the back of to try and solve the thing that I knew how to do. And then every time I came up against a problem that would land me back in spreadsheet land or manual data entry or something else, I was like, surely there's got to be a better way to do it. We'd go searching for it, we'd chat to some people. And then off the back of that would be like, all right, well, my decision at the age of 25 was literally to understand that I had time. I didn't have a lot of money, but I had time. And with time, you can do a lot of things if you are determined. And I was stubborn as hell. So very determined, and decided that I would try different things. So examples might be flashing back. So the one that Nick and I had a crack at, we both had an interest in, why do people buy rental properties? Like, why is that the default mechanism for creating wealth in Australia? And I was thinking about all the things that I'd done in my past. So we used to create what if analysis scenario and transactions. And at the time, you could only, I'm not sure if this has been solved yet, but you could only go online and find, what's my LVR? Like, how much can I borrow? What's negative gearing look like in year one? But all these things were separate. It wasn't kind of like a one area. There definitely wasn't a report or an app where you could then get comments from your accountant, your parents, or whoever else to try and gain an idea, and then nowhere where you could put the final outcome, because as we know in Australia, most things are sold at auction. So no matter what you put in the what if scenario, it's usually wrong. And so being able to sort of tie that back. And so Nick and I decided that we would do that instead of doing an MBA. Did it weekends outside of hours. We engaged with Agile Coach, which was new for both Nick and I at the time, and this is 2010. We tried outsource developers. We had some great guys and girls over in Brazil. We had student developers here in Australia do internships, and we weren't trying to rip anyone off per se. We were just like, how do we learn and try and make this? And our goal was just to get something to market and earn $1. Now, the unfair advantage we had is that I also owned an accounting firm. And so a big part of the thing is that we partnered with IA so that we could give the tax advice that would come out in the report. And where we ended up was like, if the cash rate is X and your rate of return is Y, negative gearing is X. If we assume that negative gearing is still you losing money every year, how much do you need to actually make over and above that in gains and income over time for it to be a worthwhile exercise? And so, what's your ideal rate of return? And so we delivered on that. And so that's an example. We called it My PIR. Not very creative as a name, but we put 25 grand in and we managed to get it to market and start generating some revenue. Nick was at Atlassian at the time. I was running Interactive, and we're both like, we're not really ready to, this is very early days. We think it's just Australia that has this obsession. We explored New Zealand and some other places, and we're just like, this is not really for us. Neither of us are passionate enough about it. And so that kind of got parked, and there's a lot of similar scenarios. So one was around OCR documents like bank statements to pull out, pretty much transactional data. And started that with a guy called Wolf. Wolf already had a company which had this sort of technology around OCR. And once again, this is 2010. So rewind back 10 years. And what we were trying to do is when you were putting someone onto cloud accounting, they might be coming to you 6 months after the year end. banks would give you maybe 3 months of CSV data. So you have 3 months where you're either manually entering this stuff in, or we were trying to figure out a way to circumnavigate that and charge like $2 a statement to have it automatically go in. Once again, got that up and running, missed alignment on where we're going for the future, so that one shut down. And the last one was sort of at the tail end of when Interactive wasn't just focused on startups. So when we had bricks and mortar folks coming online, and so we set up a little business around the order process. So what do your systems look like now? How we move that to the cloud, and then producing that and implementing that and training the team. And so that was kind of a services business. As we've learned, services aren't scalable. They got rolled into Interactive and ultimately got shut down. Hard to find good people on one side. On the other side, very much non-scalable, but we ended up being pulled more towards sort of VCs, high growth startups who had their own engineers who could build the better systems than we were going to put in place, build their own dashboards, maybe with our input, but it wasn't really our focus. And so that was that. And Practice Ignition was, in my eyes, kind of like Shopify for services. And why didn't this thing exist? It seems incredibly logical. It seemed like where the world was headed, and wanted to have a crack at building it, and chose, my domain of expertise around accounting as a problem, as an industry that was going to be forced into this sort of way of operating to kick off first. And here we are.
Yeah. And I guess what was that like? As you mentioned, it seemed kind of obvious, and again, in hindsight, it seemed a little bit obvious, and it was something that you said that you wish was sort of already in the market. What were some of the things that led you to thinking, actually, there's a really big opportunity here, and this is potentially where I should be spending more of my focus?
So the first iteration of it was we had a great digital agency over in New Zealand called E360 at the time. I'm sure that the name's changed. I don't know what the up-to-date name is. Haven't spoken to Matt and the crew in quite some time. But they were building our website, and off the back of that, it was sort of like, okay, how will we renew our clients every year? So I'm very much of the view that you need to make sure that you have a good relationship with your client. You should ask them if they're happy, and perhaps what else you can do for them, and give them an agreement for the following year, just kind of like every other business in the world does. And accountants hadn't, particularly at the time, didn't do that. And so we built a renewals portal with these fine folks. I think we only had credit card in, and then we could have a separate page that was branded on Easy Debit for collecting payments for direct debit. And so we kind of cobbled all this tech together. We had to build a big CSV, as you can probably imagine, to upload into this thing and try and create a seamless experience. And we used it at Interactive Accounting. I'm guessing it's like 2011, so 30 June 2011, I'm guessing, maybe 2012. I think it was 2011. And that was kind of the first thing. And Matt and the team weren't really interested in following that on. And so Matt from E360. And so, but I just believed that there was something there. Like, this should be how everything is done for new clients. And with APIs can connect through to workflow, invoicing, and collections. It's possible. Clients used it. They didn't find it scary. And it was, so, as you can imagine, all MVPs so structured, and particularly in 2011, that, it just seemed like there was something there. And in my view, I was a part of an industry that was about to go through momentous change. And I still had that passion for trying to help SMBs. So, one accounting firm can maybe help 1,000 groups or families, perhaps, if they're going to stay sort of small and boutique. And, it's way many more than that, A, in this country, or B, globally. And so once again, that stubbornness and sort of, I think I can do this part, and that sort of very much throw things against the wall and see what sticks, came in. And it just seemed like the one that had the largest TAM, but the largest potential benefit for the end client and also the industry. So I went for it.
Yeah. So one of the other people that I spoke to in doing research for this interview was David New, who I think heads up APAC for.
Yeah, that's correct.
Ignition. One of the things that he mentioned was, obviously you spoke to him quite early on about Practice Ignition, and he didn't quite get it. Was what he mentioned. I think his view on it was that it was almost a little bit too broad, and he couldn't quite understand what is kind of the niche messaging, or the niche thing that you're trying to do. Who is it that you kind of focus on? Despite that, he ended up, I think, investing early on anyways, and wanting to back you. But it's one of the things that sort of Gareth mentioned as well in terms of when he joined Interactive was, you having a very clear vision of what the future of the product or the future of the business would sort of look like. And, I think for a lot of founders, that's often a really sort of challenging part, is sort of understanding what does this look like in 5 to 10 years? And maybe it doesn't really seem that obvious to a lot of people now, but, I need to try and find a way to convince people of what that sort of future looks like. Do you have any advice on what that sort of looked like for you, or what was that process like for you in I guess building that conviction for yourself despite a lot of the pushback or the messaging that you're getting from different people, but then also trying to convince other people to come and join you on that crazy journey as well?
Yeah, if you can get really good at presentations, and there's amazing tools, things are so much easier to build now, and that's just a revolution of technology. It definitely helps to be able to be a really good storyteller, and doing that with slides also gives something for people to take away. And so the accountant in me was good around a boardroom table and good with a whiteboard, terrible at slideshows, and trying to give a crisp message that was simple enough for people to understand is incredibly hard. And so particularly in an industry like accounting, where most people are focused on the work that gets done and the tax side, I was talking about how do you run the actual business. And people, for whatever reason, didn't think that was a problem. Yet I could talk about the fact that it takes them more than 90 days to get paid on average, high amount of WIP lockup, like their business model is fundamentally broken in the time cost model. So in terms of advice I could give, focus on the simplest thing that you achieve. And so for me, it was like the best way to run a practice. Like I went on and on and on about the future and all this sort of thing, whereas I should have just focused on they get paid faster and just capped it right there and explained how and why, and used test data around the fact that we'd run that experiment at my own accounting firm using that renewal portal, and then early what we saw from customers of practice Ignition. So high acceptance of proposals, high instance of payments down, people get paid more often or more regularly on time, therefore better accounts receivable, or lower accounts receivable, therefore more cash. Like if I just stopped there, and that everyone faces this problem, people would have probably just gone, tick, tick, tick. I went down the path of the efficiency of connecting contracts to workflow, the efficiency of contracts to invoicing and billing, cash flow, understanding unit economics, focusing on MRR, introducing that as a concept to accounting firms. And the list kind of went on, and people were just like, so what is this person doing and why? And yeah, Dave's an interesting one. So obviously he works at Practice Ignition now, but he was at Xero at the time when I first met him. So he was head of sales in Australia when they had like a team of 6 or 7. And then went on to a few other sort of startups like Receipt Bank, Spotlight. And I think he invested when he was at Receipt Bank, and great business. But he at least understood at that time, and I actually think it was from the fact that his accountant was using us, and he spoke to the accountant and asked why it was good. I'm pretty sure that was the tick for him. Very thankful to have him on board. He's obviously still on board today. But yeah, keep that message clear and concise. So, I am X for Y to solve Z. It's kind of simple. There's so many startup playbooks on how you should build a pitch deck, and I definitely suggest you just go find like the best decks, which is like Airbnb, LinkedIn, Series B. There's a sort of a standard list that if you Google it will come up everywhere, and if you can get yourself into that sort of frame of messaging really, really concisely, it's a huge upside.
Yeah, I think just picking on a couple of the things that you mentioned in terms of you saying that like you were really good on a whiteboard, I think part of it is just understanding, what is the right sort of format and medium that you best communicate in as well. But, as you mentioned, storytelling is just such a critical component that founders need to get right, not just to convince your customers, but for people to come and join you, for investors to come in and invest in you as well. Are there any particular, you touched on a couple of decks that I highly recommend that everyone should look at, and I'll include some of those into the show notes for this episode. But are there any particular sort of resources or people that you spoke to, or things that kind of helped you in shaping what that story for Practice Ignition looked like?
Like early on, so you spoke to Matt on this podcast. Matt and I were probably on a similar journey at a similar time. So we definitely riffed on things, and Matt always tried to simplify the messaging, but for me, it was like, obviously it's a different problem. Matt's amazing on dev tools. And so, trying to equate dev tools to what we were doing was sort of, was different, and no disrespect to him because I love him, but like trying to find someone on your wavelength, it was probably almost easier to speak to a customer and ask them, why do you like this tool? Because they would give it to you straight. And obviously they're more right than you are, particularly if you hear it 5 times over. Doesn't matter what you have in your head. That's the reason they're buying your product or using it. So definitely that. And I had the good fortune of speaking with folks like Michael Wood, who's one of the founders of Receipt Bank, sway of other people across the time, Mikkel, who's the founder of Zendesk. And I was just fortunate enough to sort of meet all these folks who would ask me what I'm doing and then try and help me simplify it. But ultimately, I think customers is the best place to go, or users, because they'll give you an answer, especially if they've had time to think about it, that usually is succinct. And even if it's simple and you don't think that's the full value of the product, that's probably what they're going to tell other people. So it's probably what you should tell other people until you've got that full suite or that bigger product.
One other thing that you've sort of touched on as well is, obviously having a really close relationship with Xero has been sort of really important for Practice Ignition as well, I imagine. I spoke to Holly Kaji recently from Bot, who's run previous businesses that have, closely integrated and partnered with Shopify. From your perspective, I guess, how did that sort of relationship with Xero sort of come about, and how have you sort of cultivated that, and what does that sort of look like from a business growth perspective for you?
Yeah, for sure. I mean, my accounting firm was built on the back of Xero, and not that accounting awards or industry or software awards are the end of the earth, but the years prior to launching Practice Ignition, we'd won, or the firm had won, sort of like back-to-back awards. And so I was very close to kind of the early team there, knew them all, had been to their head office, met with Rod and sort of the whole crew. And so as we were launching Practice Ignition, I actually went and parked myself with their blessing in their Wellington headquarters and sat in there and had the ability, you're scrapping for everything when you're a startup, had the ability to bring folks into the office who are, as you can imagine, if Wellington's the headquarters for Xero, some of their best customers are right nearby. And so being able to bring those folks in and understand a bit more about what they wanted to see out of an MVP, what they would pay for, what they wouldn't. That definitely helped. Our first version was built with Xero products kind of locked in, and nothing against other accounting cloud products. Just in 2012, they were kind of it. And so you had to have a Xero Practice Manager account, or a Workflow Max account as it was called at the time, and a Xero account to actually use the first version of Practice Ignition, which obviously reduced the size of our market that we could go after, but gave us something where we could learn and get something up and running and lean on other data structures. From then on in, very much followed a lot of how they went to market, did a lot of co-market. But sometimes it's hard because their strategy was to go to the SMBs via the accountants, but their strategy on the practice side was very much to bring together a bunch of tools, in a lot of cases via acquisition, but they're not charged for them. And so their investment focus was more on the SMB side, as was their advertising and big dollar spend. And so we were always this awesome partner that they couldn't quite figure out how to work with. And I think we've now, over the years, sort of slowly improved that, but we're always in there with them at the coalface, whether it be at trade shows, webinars, and other things, trying to best go to market with them as best we could. And obviously we have a lot of great shared customers, and I would argue that without that innovation, my accounting firm probably wouldn't have existed until later. Practice Ignition definitely wouldn't have existed until later. So, very, very critical in our genesis, early go to market, how we went to market, and how we scale up now.
Yeah, I mean, one of the things that you just touched on there was, obviously if you partner up with a particular organization, it potentially limits your initial sort of market that you can go after as well. And I guess that's often a trade-off for a lot of different founders, and just understanding, is this going to be the right approach if we just focus on a particular partner, that the trade-off of what we're giving in the market to all of the benefits that we sort of get on the flip side. Was there, again, for any founder that's potentially in that situation at the moment where they're considering whether to kind of double down on a particular ecosystem, are there things that they should look for where it makes sense, or potentially where it doesn't make sense for their business?
Yeah, like time to market and time to value for your customer are two very, very it's so important. And so for you as a business, you as an entrepreneur, and so as a first way of getting to market, I think it's awesome. Particularly if you've got limited time and resources. So I'm an accountant. I coded a bank statement. I couldn't write code. So I had contractors as developers in. So Matt Allen being one of them, like the first lines of code of the app. But they're not incredibly cheap either. So you don't have someone with that same sort of vested equity. Like I'll do everything to get up and running. And so the shorter you can make that time to release and learn more, I think the better. So great starting point. As you grow the company, it then becomes about, well, are you in charge of your own destiny? So PI became kind of a standalone app a few years later or a year later. We didn't have to have those things in the app, but obviously we had the models. So integrating back to them was super easy, logical, and we knew how to do it. And so we then sort of went, okay, well, not all accountants will use it this way or use those tools. And so we unbundled and sort of went down the path of making PI a standalone. But there are some amazing businesses that have been built on the back of just partnering with one ecosystem partner. I think the big thing is to make sure that, if you're doing that, it's a platform, and a platform that has a platform team who are going to help you get to those customers and perhaps invest in your business. But bear in mind, you might be limited on outcomes because if you're built on top of Salesforce and Salesforce alone, it's really hard for someone to come in and go, well, you're not sort of held by Salesforce in terms of what you can build next. And I don't mean that they're going to say, no, you're not allowed to build that, but you're limited by whatever their tech stack is in terms of what you can build on top and their guidelines and their terms. But many great businesses have been built in such a way. So it's just hard because you're not sort of independent with your own destiny. But to move off that is a huge lift from a technical standpoint. And so I think if you are trying to build a platform that can stand on its own 2 feet, you can start with someone else and then move off them, just sort of create your own independent destiny. And that's kind of what we did. And I mean, I would lean towards that path because then, you're able to go wherever you want. But the downside is it's a lot more risky.
Yeah. And to my understanding, Practice Ignition has probably doubled down on their relationship with Xero as well. So I've heard about your parties that you throw prior to XeroCon as well.
Yeah.
Do you want to, like, again, I think it's such an interesting, story of like, how do you really sort of capitalize when a large sort of customer segment is there, and how do you do it in a way that really kind of fosters both brand building, but also building kind of deep relationships in the market as well. Do you want to talk a little bit about how, I guess, those, how that sort of came about and what that sort of built into now?
So we were, like a lot of Aussie startups, sort of like we had some capital, but we weren't heavily capitalized. So going to market, like if you're ever going to target your customers, you can use, online SEO, Google search words to figure out how to target them. But if someone else brings all your ideal customers into the one place, then you should be trying to figure out how you get in touch with those people and make the most of it whilst they're there. So Xero very much created the groundswell with its partners and ecosystem around these events called XeroCon. So imagine, was it Salesforce Live or when Apple does their release of new products, right? Like everyone who's in that ecosystem or wants to learn more about that is at those events. And the same is true for cloud accountants descending on XeroCon in the thousands. Now, one thing that may be a surprise to people watching is that accountants love to let loose. And for a lot of people, this is literally like their Super Bowl. Like this is what they focus on day in and day out. They get to learn about all the new stuff. All the vendors are there. They get free swag. And just like any other junket, there's parties and things that go along with it. So we came up with the notion of trying to host pre-con because Xero provided amazing sort of gala dinners and balls and drinks with bands inside the exhibition hall. But there wasn't really a space, and it's their conference, rightly so. There wasn't really a space for the ecosystem to kind of host evenings together. And I'm always big on going don't compete, go to market together. And so we would bring in the whole community because we were aware that accountants need to use many apps. And so we sort of led the way with these pre-con parties. We'd bring in sponsors, we'd throw in a tab, good food. There was almost no speeches, but there was banners and areas up around so that people could learn perhaps about some tech they might have wanted to see on day one. And the whole idea was to be front of mind for that, whilst building great relationships with our partners, such as like Receipt Bank or HubDoc or Float or Fathom or Spotlight or anyone else in the ecosystem. And we very much, we were kind of early on, so we very much wanted to try and wrap our arms around everyone else and help them get to market, because together we're stronger. Together we can co-market, co-sell into these firms that are looking to change the way they fundamentally interact with the clients. And these parties started off small, and they started to get really, really, really big, and then kind of to the point where they're just huge. So I think it's almost like a SaaS startup. We were doubling every year. So the first one we ran was sort of on a whim. We didn't know it was going to work. I think we had 250 people. The next year we had 700. The year after that we had 1,400. And then we kind of hit our natural limit, because there's not many venues that can hold parties any bigger other than the exhibition hall itself. So and what we'd end up with is the teams then had the opportunity to run promos. So it's like, come to the stand tomorrow, sign up, and we'll give you this. And so very much accelerated the way we were able to convert on stand, because most people think events are silly. Once again, if all your fish are in a barrel, all your customers are in a central spot, this too goes for accountants that may be watching. Go to where your customers are. Don't try and shoot and spray everywhere. Double down on where they are and try and capitalize, make the most of it, but make it appealing for them to do so, and go with it on the education intent, the community intent, and offer a deal to say thank you. And it worked.
Yeah, no, I think it's and I think to your point as well, in terms of marketing, there's, so many different things that you can do, but if you can find a way that, where your customers already are, and just double down on that and just find a way that you can add value, I think there's a lot of wiggle room in finding growth through those particular channels as well. One other thing that I really wanted to kind of talk about from the early days of Practice Ignition, again, you mentioned that you've grown to sort of over 120 staff now, but from what I understand, even when you were at 7 people or so, you already had 4 offices in 4 different countries. And there seems to have been a very sort of early and deliberate focus in being almost sort of global from day one. Why was that sort of so important for you that early on in the business?
I think if you're trying to solve a problem, and given who we were going after as well. So once again, I talk about events is where they research stuff. Like if you think about the people who hold the keys to an accounting firm, most partners are north of 60 still, like in terms of the average age, right? So they're more likely to be at a physically present event. Also, every market is different, because you have compliance around tax and you have different winners. So we here might know Xero and Sage is the winner in the UK historically, in Canada. Intuit is the winner, who do things that are incredibly important to that market, like Avalara with sales tax in the US. But we have no idea and no need for that here, because we just have a flat rate of 10%. So it's kind of easy. And so just gaining knowledge around what is imperative in those industries, who the partners are we need to go to market, any core product changes we need to coalface. So tax on services or goods in Canada, you have a providing province and you have a receiving province. And then they maybe have blended rates based on those 2 provinces, or they have those 2 combined. And so there's not really like a flat 10%. So when thinking about how you build the product, we needed to allow for both sales taxes and within the product in terms of how we create a contract effectively. And things like that we wouldn't have learned otherwise. But it was also, we were aware that Australia was and New Zealand were kind of the leading of this industry, and it's moved to the cloud. We didn't know how far along or how far behind, or what head start we had, how prevalent were checks, what were the barriers to us providing payments in these countries and who were the go-to partners. And so having people there early meant we had constant stream of intel. What do we need to do? Who do we need to go to market with? How do we sell to this customer base is the same. And just a great deal of learnings coming in. And, we'd seen many companies go across the sea from Oz, from New Zealand, from other places, and not do so well. How do we avoid making that same mistake? And let's build that into the culture early. But also knew I wanted to build a global business. Like, we are a big island in the middle of nowhere, in case people haven't noticed. There's not a lot of, you look at MYOB as an example, you have to sell a lot of product to the same people and basically keep making acquisitions to sell more product for it to work in my industry, so in accounting, just in Australia. But if you go global, your market TAM is infinitely large, but also you can solve a bigger problem for those SMBs in terms of how accountants run their business. And for me, that was sort of the driving force. It's like, let's learn as much as we can early. It was very much frowned upon, to be frank, but I think it put us in good stead for where we are now.
Speaking of learnings, I had, like, my last business was a services business as well. It wasn't intentional, but I feel like I learned so much in terms of learning how to operate a business. I guess, what have been some of the lessons that you've learned from Interactive that you've been able to apply at Practice Ignition and vice versa?
Very much so for me. So I'm the worst salesperson at Practice Ignition, like hands down, because I get frustrated if people tell me something can't be done. And bear in mind, these are people running accounting firms. And so the biggest learnings from Interactive was the way it definitely helped MVP. How do we run our firm? What do we want to build next? Or what do we want to do next? And how does that interplay? So it's great for the early days. I think great for general marketing. Like every vertical, there's sort of a language. Now, bear in mind, I'm probably not the stereotypical accountant, perhaps, but there was at least that fundamental kind of knowledge that we could then roll out throughout our marketing and being able to have an honest chat with folks around what they would like to see. And then the other thing was very much interactive. We ran events. We hosted, I don't remember, we used to call them entrepreneurial meetups, entrepreneurs meetups. And so we had every quarter, every 6 months, and Gareth might be able to correct me, but we ran these things. And our third one, we had very much keeping in mind who we wanted to target. So high growth businesses that like data and numbers and wanted to use the cloud. So we ran a pitch night. At the end, we had the GM of Zendesk, his employee number 2, speak. We had John from Atlassian, who was the head of data at the time, speak and give a talk, an amazing talk on what they were learning from their data. We had a bunch of other people talk about the funnel, people from Xero. And so we ran this event. We had 120 people in our office. We had a team of 3. We filmed everything. We took surveys. We gave prize for the best talk. We gave free headshots, like all this stuff, and we lined it up. Off the back of that, we kind of created this groundswell that we were the accounting firm for this industry. And so I think what I learned from that is a small spend done in the right way, where you create your own content and you own everything around the peripherals, can help you get started. And it was definitely a playbook I took from that over into Practice Ignition. Obviously, understanding cash, profit and loss and things help too, being an accountant, but I wouldn't say running an accounting business gave me that insight for if that was next. I'd done that for years. So I think those are the big takeaways. So how do we speak to customers? How do we create a bit of groundswell? Very much of the mind that we don't do things just on our own. We go to market together with other people and sort of create a sense of community.
Fantastic. Last set of questions from me before we shift gears to audience Q&A. So for those of you that are tuning in live, if you have any questions for Guy, please submit them via the Q&A tab that you can find at the bottom of the screen. So Guy, I know one of the other things that you are deeply passionate about, that you spoke about a little bit earlier in this interview, is investing into tech startups as well. I guess, what is it that you look for when you invest in companies, given your sort of experience and background?
Yeah, I mean, there's basically 3 categories. So it's fintech, so future of how we're going to transact or save. Other things are around how do businesses run better, so particularly focused on SMB for the most part. And then the last one is sort of ESG, so creating communities or something that has an ultimate purpose in addition to growing a business. It's how do we help this many people around the world achieve some better outcome for a community that may be underserved, underprivileged, or otherwise. And then overlaying with that, typically most of my investments are fairly early on. So I love to be kind of like angel round, pre-seed, seed, and help as much as possible. I have the experience, I'm not sure if it's a privilege, of trudging the world for years and meeting lots and lots of people in the sort of later stage investment funds around the world. So then trying to help connect with those as applicable. But ultimately, I'm just another founder who sits back and hopefully can share stories around, what happened to us or what we did, but also just be there to listen. And in terms of the other things that I look for is, I love deep industry expertise, unsurprisingly. So we're solving this problem because we used to do it this way. It's broken, and we're trying to fix that. And then people who are humble and care about their team and care about the problem they're solving. So, the accountant in me is very much, like, I want people who perhaps aren't going to go for the 1000x. At least I believe they're building the next great unicorn. Because I feel over 10 years, I'm sort of more interested in those people who become an overnight success 12 years later than I am interested in someone who thinks they're going to get there in the next 4 years. And that's probably it. And then great diversity, right? So I want people who think differently to the way that I do. I want to learn. So I want to learn off the people that I happen to be lucky enough to be along the ride with, and sit back, take those learnings, continue to build thesis on where we're going. But those sort of three main areas: humble people who are smart, deep industry expertise, and just good people generally who I think are going to build a business. I've got people, companies that have built profitable businesses and companies that have built lights out growth businesses, and people who are just still trying to figure out how to solve that problem. And to be honest, the accountant in me just wants to beat the stock market. So, like, that's my investment thesis: is solve problems that everyone has, that hopefully have some form of altruism somewhere in there, and beat the stock market and learn along the way and help wherever I can.
Very cool. And you just touched on this as well, but obviously you've had a pretty incredible sort of fundraising journey yourself. I think raising 35 mil in total, including a fairly sizable $26 million Series B round. What was that sort of funding journey like from a practice ignition perspective? And I guess, you've spoken in terms of what you look for, but what are things that you looked for on being on the other side of the table as a founder, taking capital in trying to identify the right investment partners for the business?
Yeah, sure. I mean, I think we always tried to find folks that understood what we were trying to build and back the thesis. I'm probably most thankful for our earliest investors. They obviously took the biggest risk, and most of those were from industry. So people around, accounting and tech, or family or close friends. And so, those people took the biggest risk. I'm incredibly thankful for their faith. We struggled so hard to raise, like it was brutal. So we raised almost every 12 months, which meant that once we closed, we'd spent 6 months deploying the little capital that we raised. And when I say little, like our first rounds were in the hundreds of thousands of dollars. And then we'd be trying to figure out, how do we move the needle? If you think about how long it takes someone to get ramped up or be great at the job, it might take 3 or 6 months. So, and then every round takes about 6 months to close. And so if you're running out of capital and you've got 12 months runway, it's just a slog. What do we look for? People that backed us, people who had experience building businesses, and then people who had joint passion on the vision and the mission that we were on. So very, very fortunate to be joined by guys like Craig Winkler, the founder of MYB and Xero's, prominent investor in an early stage. We had, Dave New, who had great industry expertise and awareness back in the days, Nick Muldoon, Matt Allen. And then we went on into, had Adrian DeMarco, who started Tech One. So, the guy who's seen everything from Cobalt and wheels on computers through to cloud. And, it's a massive journey to go on over 35 years. So experience from that. And then some great funds. But I think the hardest part for us is that we're kind of coming up in a time where if you're a consumer play, there's a lot more money being driven into that. Or B2B, where it was global and there wasn't really any regionalization required, or you could spend money on AdWords and it would work. And for us, that wasn't really the case. And so we struggled a bit in the early days. And then once the payments piece came in, more people started to be interested. But once again, they just looked at the margin on that and sort of didn't really like it because it's lower than software margins. So we just sort of kept going along, and now we've ended up in the, I guess we've known all along, but we're in the SaaS vertical, SaaS and payments, which is, like the hottest new thing. But once again, it's kind of like 7 years on, people have finally cottoned on. And so the last round was very, very different. It wasn't us trying to push things uphill or explain why we were valuable or, get down on, on the ground and beg for more type thing. It was very much around the, this is a vertical. The vertical's large. You guys are the clear winner at this point. Greenfield's ahead of you. Go for it. And so we look for people who just understood the thesis, and very much we wanted to stay an Australian company for as long as possible, if not forever. And so, flashing back, pre-Canva being successful as it is today, Atlassian and everyone else, trying to pitch to an overseas fund that you're an Australian company doing great things, there wasn't really a track record, which is why a lot of those companies were profitable before they raised big rounds. Campaign Monitor in there as well, Envato, etc. And so, now I wouldn't say it's any easier. It's still hard to tell a good story, still hard to find that good fit. But people who believed in what we were trying to go after and had faith in that mission and that it was worthwhile is very much the thing we look for. And then what they look for in us is obviously, good returns, I guess, and not losing their money, being the secondary focus. And then, those folks who hopefully have the ability to help us, whether that's an ear when you need it, a shoulder to lean on, telling their experiences. All those things are incredibly important as you're sort of coming up and trying to find those people that are going to be there in the good times. Everyone has bad months, bad quarters along the way. So people are going to be there to support you and help you when that happens.
Guy, I have so many more questions for you, but I just noticed the time, and despite being able to chat to you all day, we're just going to shift gears to audience Q&A and just pick one question out because I know you have a meeting to get to as well. So the question from the audience is from Gabriel Dukes, who says, what's the secret to effectively selling to accountants?
You need to understand what they're going through. So particularly this year as an example, and the biggest thing is trying to figure out some way that you can help them just run a better firm. And I mean that for those perhaps who aren't aware, that this year accountants have literally been the coalface for everything COVID related. JobKeeper gets announced. 1,000 SMBs call their accountant. Does this apply to me? How do I do? What do I need to do next? And add that on top of normal year round, which depending on which market you're in is usually not a very quiet time generally.
Thanks for listening to episode 132 of the Startup Playbook podcast. As always, full show notes from this interview will be available at startupplaybook.co. Next week is a public holiday, so I'm taking the week off, but I'll be back in 2 weeks at 8 a.m. on Tuesday, the 10th of November with another live episode. And my guest for episode 133 is the founder and managing partner of our innovation fund, David Shane. I'm really looking forward to that interview and hope that you can join us. But in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, thank you for tuning in, and I'll see you in 2 weeks.